Jim, what's your take on financials overall? So as a cross-asset, do you like financials? It's also, of course, a monetary policy story.
Yeah, I think there's a couple general points in the news. I mean, firstly, it's very clear that banks are no longer the problem. They're not going to be the source of the next crisis, and in some places they actually look pretty cheap. U.S. banks look quite cheap to 10-year bond yields. I think the other general point, certainly around the stress tests, is that it's very clear that a lot of this tax cut is going into buybacks as opposed to going into the economy. So I think there are some negatives in terms of the risk to the global economy from what we're seeing in not just the U.S. Banking system, but other sectors of the U.S.
But Jim, would you make a significant difference between the German banks, the French banks, the UK banks, and the Swiss banks in the European space? Because it's a different story to what we see on Wall Street.
Yeah, listen, I think that European banks are further behind in lots of different ways. If you look at banks relative to bond yields, which is one framework that I use, European banks don't look that far off from where they're supposed to be. U.S. banks look a little bit cheap. So I think the differentiation matters, and that's going to be around for a long period of time.